Happy Wealth Wednesday. Eva, I'm so excited to have you here today. Such a great introduction from a close friend and from a real investment in a continent that holds a very close place in my heart, which is Africa and just emerging markets in general that you're spending a lot of time in, and also diving into what we'll talk about later, but your book, which is The Good Your Money Can Do, and just this new wave of conscious investing, impact investing, and what that actually means in practice. So I can't wait to dive in. I would love if you would kick us off with just a quick about you. Where in the world are you right now, and what are you up to?
I'm in Dallas, Texas, which is not where I am from, but I've lived here for the past 7 years. And I also live in London in the summer and have, let's just say, another foot in Los Angeles. So we have that in common. And what am I up to? Well, this is a crunch month for me where I'm closing the second venture fund that I have raised in my career on my own through Beyond Capital Ventures. So I'm pretty much up to that. But aside from that, I'm also a mother of two children, and they are a big part of my story as well. That's a large part of my life. And then I think something that we have in common is that we also love art, and you can see some works that I cherish here in my office. And so I'm also up to that and thinking about how to build my African artist collection out a little bit further.
I love it. I can't wait to dive into all of these things. And it's just so inspirational. So, the first thing I'd love to hear and share with everyone listening is, do you remember what your first ever investment was? Who or what got you started?
I've always been a money person. I've always been a numbers person. My definite personal first investment was buying a car for myself when I was a teenager. It's interesting because the story of saving up for that car and the earnership behind it, and also the utility of something that got me from point A to point B, triggered a lot of important reward systems in my brain. I, in many ways, do believe in certain incentive-based alignments, and we employ that at my venture fund as well. I have to tell you, it was in 1993 Acura Integra. Which apparently is a pretty cool car, but I bought it because it cost $5,000. And that's what I had saved up from baptism, communion, all of the life milestones. And these are the days when somebody used to give you a paper bond. Maybe to talk about my first professional investment, after I left the hedge fund industry, I started our first fund, and our first investment at Beyond Capital Fund, our first vehicle, was called Sanergy. We actually exited that company successfully, but we invested in a chain of toilets that were franchised to individuals who were operating them in pretty much the informal settlements only in Kenya. And then the waste was picked up and turned into animal feed. That was a business that we had a strong return on in the portfolio at the end of 2020. I think that exemplifies the start of my career in investing in purpose-driven businesses in emerging markets.
And I know there's also like a personal story to kind of how and why you got into this space. Would love if you would share how that happened.
Really two things. I grew up with a family that had lived in Tanzania. So I had the awareness of Africa as a place that could be, in my world. I say that and it sounds very naive, but the truth is, I'm looking out here over Dallas. I don't think a lot of the people walking around Dallas today are thinking about the African continent, and also thinking about the tremendous amount of growth and opportunity that's happening in that market. I didn't have the bias around emerging markets when I left Wall Street. I was also taking the portfolio manager approach and taking a higher level approach to how do I construct a portfolio and create a product that would be appealing to investors that maybe haven't had emerging markets exposure. In fact, we're all under allocated to emerging market. We're all typically in low single digits, mid single digits in our portfolios. And we really should be above 13% to be anywhere near a GDP growth adjusted allocation. I pivoted to becoming an emerging markets VC, but I also was a bit of an outsider on Wall Street. Not only because I'm a woman, that's probably the least of the reasons, but also because I didn't grow up in wealth. And I didn't grow up in a place where I spoke the language of wealth. I grew up in Staten Island. So I grew up in literally on the other side of the water from Wall Street. And I learned that the language of money is not for everybody. And so it led me not only to think differently about venture, to think about how can I rewrite the playbook as an investor and start my career at Beyond Capital Fund and Beyond Capital Ventures, but it also led me to write my book. So I'm also focused on that. I'll show it to you because I always have it here next to me on my desk. I wrote a book called The Good Your Money Can Do. And the focus is really to shed light on the fact that we all are already having an impact, that no investment is neutral, and that we can all use our money and all our resources to line up with our values. And it could be $50, it could be a savings account, it could be $150,000 or $1 million. We can all align our values with our money. And that's the reason I wrote the book, especially thinking about where I grew up and how disconnected that conversation around money can actually be.
I can't wait to dive into this. I'd love to know what role you play in the wealth space now and why it's important, especially tied to the book on the good your money can do.
I believe that wealth is more than money. And I'm really deeply passionate about changing the mindset that we're just here to make more money with our money. And I worked on Wall Street, and I'm a New Yorker. I know how to speak that language extremely well, but I don't think it serves us as people. In fact, Harvard Business Review has proven that the greedier and stingier we all become, the less happy we are. And I don't think it serves us as a society because people are left out of the system, and I just don't think that that's ethical. Justice is one of my main core attributes. That is a mission of mine. I believe that the pie is not finite. I don't believe in I'm winning, you're losing, or when you're winning, I'm losing, or when I invest in something that might have an impact, I'm losing my return. Not at all. I think that we can have a win-win, and it's been proven time and time again. It's also proven in my venture fund as well. And there are many others out there that have great portfolios, great returns, and great impact. So for me, that's really where I am in the wealth space. I also have committed my personal capital to be 100% aligned with my values. And what that means is I have a public portfolio because I need liquidity that is much more kind of intentional when it comes to what public offerings and ETFs there are out there. And I use an advisor for that. And then on my my private portfolio, I will only invest in female fund managers. I'm interested in anything else. So that is my filter, because I believe that women and people of color are highly underrepresented in finance, government, business, and there is systemic bias around supporting us. And I want to change that because I think we're better decision makers.
Proven that when there's more diversity in thought and decision making, better decisions and better outcomes are made. So what do you think has been the most exciting thing that you've learned that you would want others to know, especially others maybe thinking about being part of a fund or starting a fund?
I think the most exciting thing is that there's tremendous opportunity in emerging markets. I mean, I truly do get up every single day excited about that particular fact. And when I say opportunity, the next billion in our market, which is India and East Africa, consumers who are, we call them the rising consumer class. They are lower income, living on up to $15, $20 a day. They're not middle class, but they lack access to basic goods and services. And so there's an opportunity to provide solutions and to build solutions now with underpinning of technology, Web3, crypto as well. Decentralization of finance, I think, particularly bodes well for the African continent. There's really no difference in the way that we invest and we need to invest in our markets. Yes, there's risk, but there's risk everywhere. And I personally would rather be long emerging markets than long Silicon Valley, Me Too innovation. The trend that this population will grow to 1.7 billion, this is our market size, is pretty staggering. And one thing I wanted to share as well that I don't think everybody would know is that one in every four people in 2050 will be living on the African continent. So when we even just think about demographics, and then look at GDP trends, despite the volatile markets that we're in and the interest rate rises and the currency fluctuations that we are seeing, and just to be real about that, there's still a lot of opportunity. And the valuation, so if I'm speaking more VC terminology here, but the valuations are also at a reasonable level right now where you can get in at good pricing. And this is an opportunity to make money and have impact as well.
Fantastic. I got chills when you were sharing the stats about the population, and it's true. So much of global growth is going to come from those continents. And to your point of many of us sort of sitting at home, never really contemplating or thinking about Africa as a continent. It's a really fascinating thing to explore. And so thanks for sharing that. Is there a person or a company that's really inspiring you working in this space, and why?
It's so hard to pick a favorite child. But I'll talk about one business that really inspires me, because I think it addresses some of the pain points, but also shows some of the opportunities when it comes to this impact return nexus. It's called VBEG. It's a medical supply business in East Africa. It's a company, and this is like golden for VCs, that is disrupting an industry that hasn't yet been disrupted. This business is tech enabled. They're also developing AI technology to do demand simulated modeling and be able to share with their customers, we think that there's a malaria outbreak here, so you probably want to have more of these particular products. Or we see a higher incidence of cancer here, you probably want to have a CT scan machine. So there are a bunch of ways that this company is going above and beyond regular distribution. But then when it comes to distribution, they're also entering markets that are highly underserved, like the Democratic Republic of Congo. And the DRC should matter to everybody on this planet because they have the largest carbon sinks in the world. But these two founders have bitten off a lot. It's an Austrian technologist and a Kenyan who's worked in health supply. But they are truly solving a problem that can have impact, but can also have incredible financial returns. And that's what I love about what I do, and they exemplify that.
What advice would you give to somebody getting started? Maybe especially somebody thinking about incorporating some of what we talked about today in their portfolio. How do you get started? Maybe even how do you evaluate impact? There's so many different ESG ETFs or impact funds. Like, it feels like there's overwhelming amount of choice now. What advice would you give?
My view is always to use the right advisor. And that doesn't have to be an expensive advisor. That could be a robo advisor. My favorite one is Ellevest, which is truly walking the talk. So when picking that advisor, look for values alignment, look for authenticity. I think in today's world, yes, there's a tremendous amount of choice. Not taking no for an answer is absolutely number one. There are advisors that are going to tell you, oh, ESG, impact, you're never going to make money there, so just don't do it. If you really want to do this, there are ways, and you don't have to listen to that person. You should just vote with your feet and move on to another advisor. If you are prioritizing how to get started, like with your asset allocation, impact, ESG and impact opportunities really do fall in line with different asset allocation and asset classes. So if you're looking for more public securities, let's say that's equity. If you're looking for municipal bonds or debt, there are options, and they meet those risk return trade-offs that you're probably looking for. So I would literally not just say, I want to do impact, I'm going to invest in that startup that pitched to me, last year, because that's the only way to do impact. I would look at it, take your 401k, take your savings, take your investment portfolio, and slice it down into what are the asset classes, and then see how can I trade out what I already own. there are companies, and I do write about this in my book, that are more authentic when it comes to impact integration, even ESG integration. And there's, research that can be done around that quite easily. Websites like As You Sow that help you understand the perhaps like second layer of impact that a company or a fund is having as well. And so you can do some independent research there as well. Investing is a big world, and it's also about what resonates with you. Being authentic is actually the top advice, even though it's hard to know what that means until you get started. But don't let perfect be the enemy of good. Toe dip into this space. Be authentic about what you want. Don't do what your friend wants or, what your mom wants. And then I think you'll start to learn, and there will be like a flywheel of learning. And if you can get a great advisor that can just hold your hand and guide you, even if you think they're not values aligned enough, you can also use your relationship with them to push the envelope a little bit and ask questions that perhaps you'll get the answer to, and then have more clarity and be able to adjust from there.
How else can we stay in touch with you? Both the fund that you are now in the midst of closing up, personally, as you're sharing your insights, how can we keep in touch?
So you can follow me on LinkedIn and Instagram. Instagram, I'm at Conscious Investor. I always love engagement there. I think you'll get a lot of prompts if you just scroll in my grid feed and see some of the questions that I've posed for your own journey. To learn about the fund, the venture fund, it's beyondcapitalventures.com. I can talk about an incredible partnership we have with Impact Assets, where we are allowing donors to invest in our fund. So donors to invest a minimum of $5,000 in our fund, and then that actually gets recycled into what's called a donor advised fund over time when we get returns back. So it's a unique structure. I care deeply about making venture and making the type of work that I do accessible to everyone. So that was an exciting partnership that we announced about a month ago to democratize access to Beyond Capital Ventures. But the website is probably the best way, and of course, following me on LinkedIn. But it's been an incredible conversation, and thank you so much.
Thank you. I'm so grateful for you, everything you're doing, building, sharing, and for being on this call today and sharing your story. We'll definitely be staying in touch.